What's up, guys? Welcome to another Trade Genius podcast. Bob and Phil here, as always. So the debt ceiling resolution is getting closer. Probably get a vote on it next week, and then Yellen gets to replenish her account. That's good, right? Wrong. We're going to show you how that's extremely detrimental to the market and potentially to your portfolio. So let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co, check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. So Bob, a lot of drama with the debt ceiling, and obviously there's a big debate on whether or not, they're going to get it done in time. I think it's just probably another round of the last second to get it done. And then it's like hip, hip, hooray, and the market jumps up. But you've been looking into that data, and it's, especially in this scenario, and we'll explain why, it's really bad actually for the markets.
Yeah, I'll throw a little Greek mythology at you. There's the story of Sisyphus, is that he was being punished by Zeus, and his punishment was to take a rock and roll it to the top of the hill, but then it would fall down the other side. So Janet Yellen right now is at the top of the mountain with the rock. And if she gets a debt deal done, she has to replenish the Treasury General account, and it rolls down that side, which is, as we'll show you, it's pretty detrimental, as you said, to stock market valuations. If she doesn't get it done, rolls back down on top of her, and then we get increased volatility and selling because the liquidity comes out of the market in a different way because the government's not spending money. And so we're at a point now, Phil, where she moved it from June 1st to June 5th. And she's pretty much out of money at that point. I don't know if I explained it here. I've been talking about this stuff ad nauseum, but they were able to rob about $60 billion out of the account of the Social Security Trust Fund, which is a joke in and of itself, and just so she can claim that she's not raising the debt ceiling. Well, that money is now spent too. And I think that as of this morning, isn't she down like $33 billion, Phil? Something like that?
38.8 billion. Yeah.
38.8 billion. So, I mean, that's fumes. That's like you trying to get to the gas station when your counter says you have 3 miles left and you're about 4 miles from the station and you hope you're going downhill. And so that's the setup right now. So we have a couple charts. Phil, I don't know if I'm going to make you juggle here, but if you could show the 2011 one first, I think that one's the one that's probably most germane that she has to raise, and also that she's beating into the wind. If you're a sailor, you'll know what that means, against the Fed, and she's also beating in the wind against a Republican Congress, and she's beating into the wind against an economy that really the consumer is really on last legs. And when that happened, so the weeks leading up to that debt deal, the market ripped, okay? You see that right before that little blue thing you see there in the middle, it had a pop, and that pop came after a drop when Fitch said they put our debt on watch, for AAA rating, which is another joke. It's all drama. I feel like I'm in a theater company here. And so then it popped up on, we're going to get a deal, and then a deal happens, Phil, and over the next 2 weeks, the ES falls 17% and the NASDAQ falls 11%. I think this time it's going to probably be reversed because the NASDAQ has been pumping so hard, is that I think probably the NASDAQ will fall farther than ES will. But be that as it may, we're looking at double digit. And this is just normal, guys. This isn't me wishing something bad happening, because if you notice, once she replenishes her TGA account, most times you get a lift back in the market. So what we don't know this time, though, Phil, is that we'll be deep in a recession, and will there be other events, kind of in front of us, because we're at unsustainable levels of debt. So, but first things first, we need to get this sell down before we get this rip. And I know a lot of people have been talking about, are we going to go to S&P 6,800 or, NASDAQ back to the moon. Well, you know what? It's really possible, guys, but we have to get a sell off first
Right.
in order for them to have enough fuel to be able to lift this thing off. And so we don't know really who the leaders are going to be on that. So I'm not just saying, look, we're going to just magically crash to zero. But what I'm saying here is that probabilities in history are kind of against it. And it's not just the debt deal, Phil, that's a problem. Every time Janet Yellen raises the TGA, it goes up. Do you want to throw that chart up if you have a sec?
Yeah, and it's when it's especially when the Fed isn't accommodating, right? I think the last debt ceiling they were accommodating, and now they're not. And so you're right. When she does have to go through, when she's on fumes as it is now, if you look back and she has to do a quick fundraising campaign, this is what you get.
Yeah, 5%, 14%, and 19%, all within a 1 year window. Okay, so and that last one is she was fighting against the Fed. So that's what we have to look forward to. What I want to do is I want to shift gears here a little bit, Phil, because I want to show people the Nvidia chart, and I want to speak to this particular stock. So Nvidia, if you notice here, is creating potentially what could be a megaphone pattern starting up here. If you kind of connect the two big lifts up there, and then you look when she started that Eiffel Tower and then the latest low, we look like we're having broadening action in the markets. This is a stock that you can't buy and hold. Okay, it's definitely a tool and a toy for the Momo crowd. And if you notice at that last black diamond there, this is a weekly chart, and those black diamonds are showing when it pushes out of a standard deviation range. Is that last one, well, before this latest lift, is when the CEO of the company promised the markets that Nvidia chips will be in the metaverse, which is the metaverse is going to be a trillions of dollar industry, and the crypto. And what happened is that he got the same kind of pop up into that top range there, Phil. And then when the next quarter he didn't materialize in his promises, and then also, Facebook face planted on Meta, and then we had to sell back down on crypto, it lost 70% of their value. And the story is the same for AI. I think people don't really truly understand. What we have now is maybe the very, very, very beginning of AI. I would call what we're seeing now that's being propagated out to the masses is like a really, 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 really cool FAQ system with some really cool technology around, creating manipulations of graphics. Okay. But this is going to take years and years and years and years. And I've been around, I was in the software industry in 2000. Okay. So I seen its rise because I started in 86 and then I left that industry in 2006. I saw that rise and I saw the momentum and I saw the promises, and then you saw the ridiculousness. And we talked about what happened with Sun Microsystem, and then also JD Uniphase was another one. If you remember that, Phil, you were in the ISP industry at the same time. So you were knee deep in these guys promising things in the network.
Right.
And the one thing they forget is that customers have to be able to buy this stuff. Mm-hmm. And there's a phrase out there called good enough. So, when you're talking to a CEO of a customer of Nvidia, they're going to have to justify the ROI of replacing out what they already have versus is what I have good enough. And I think they're going to find in an environment where their customers are not using as much. Look at Snowflake, right? SNOW. And then look at what happened with Taiwan Semiconductor. They both said their customers are buying less from them. Okay. But Nvidia is going to buck the trend. And I just want to point this out to you. This is what a blow-off top looks like, okay? I should have fibbed that out. That's what a blow-off top looks like. And now with the market is looking a lot like the one that you see here in this chart, okay? Just because Nvidia blew off the top doesn't mean everybody else is going to follow suit. Mm-hmm. And look at that move, Phil, on the right.
Yeah, it's textbook.
I mean, you couldn't even draw this thing any better. Mm-hmm. And so I'm willing to be wrong if we double top before we make a new low. Okay. But until then, this isn't a bull market. This is a bear market rally. A lot of people talk about it. Hey, reclaim the 200-day moving average. One industry sector reclaiming the 200-day moving average is not indicative of a bull market. All the other sectors are sucking wind, breath sucks. And if this thing rolls down, then we talked about this before, we're going to get a pause around that that 3,600 level, and we all need to pray that that doesn't break. Because if that breaks, then basically the walls come tumbling down, and we're going to complete the Eiffel Tower back to 1800, 1600. I mean, and it could be a pretty good fall. So, but I think it's going to get down to 3,600, Phil, and I think they're going to probably try to bounce it again because that's Janet Yellen should be replenished by then. So anyway, I'm just throwing my stuff out at you. I just think it's important for us to kind of understand things in context here. Is that, look, if you're really, really good and really, really smart, you're long NASDAQ and you're short everything else, and you're the true genius. But most people aren't trading that way. And a lot of people can't trade that way because they get scared off buying Nvidia at $200, right? What most people are going to do, put $10 into a share. And if your money's being managed professionally, I guarantee you people that have their 401ks are not getting the same lift as they're seeing in the Q technology space. So with that, I'm going to throw it back to you for some comments.
I'll leave you guys with this. Whenever you have a market that has very terrible breadth, banking sector's in the toilet, and tech is mooning, that's when you see your biggest drops ever in the stock market. And that's exactly where we're at. So as much hype as we have going on, and Nvidia's mooning, and the moon boys are out in tech, and even in crypto a little bit, this is not the setup you want for a broad-based new bull market. It's just not there. In fact, as Bob said, it's what you usually see at the lower peak of a bear market rally. So, I'll leave you guys with that, because the scenario here is not good going forward, just in those terms alone, much less Yellen cranking up the account, which draws liquidity out of the system. And also the recession, we're going to get back to recessionary headlines here after this debt ceiling headline stuff goes away, because the economy, and we've shown you guys numerous charts, the economy is slowing here. So, we've been in and out of the market, and I think some people have been writing this up. If you have been, and if your attitude is, well, it doesn't matter, it's just going to keep going up, I think you better think twice about that and start looking back at some historical stuff, historical charts, because we've got issues here under the hood, and that's what's going to be, I think, front and center after we get into June through the next quarter, going to be the issues with the economy, Bob.
Yeah, and I think the comps get harder and harder as the year goes out.
Yep. All right, guys. Well, that's going to do it for this edition of the Trade Genius podcast. Thanks so much for watching. Please hit like and subscribe. Head over to tradegenius.co if you're interested in our new indicators or any of the specials if you want to get into the room and trade with us. And we'll see you on the next episode. Take care, guys.
Trade Genius.